Out of 100 people, 4 will get the message.
Is the Federal Reserve crashing the markets in order to save the dollar from losing ground to the European Central Bank? It's an interesting question. It's an interesting way to look at it. And that is some of the topics that I discuss with today's guest, looking at the different factions that are forming around the world as globalism is starting to lose its grip on the world. We have the Davos ECB Euro group. We have a couple different factions within the United States. We have what's happening in Russia, Ukraine, China over here. And everybody is trying to grasp for power as it's all falling apart. And if you want to know where the financial markets are going, then you need to understand this part of the geopolitical picture. And my guest, Tom Longo, is one of my favorites when it comes down to this geopolitical picture. And those are some of the topics that we talk about today, including these different warring factions, what's going to happen with the markets, how the world potentially breaks up, what's going to happen with the markets heading into the midterm elections, and what you should be doing to protect yourself, and so much more. Now, let me warn you for a minute. This was a long interview. We sat down for about an hour and a half. However, the internet started getting pretty bad, and so after about 30 minutes, we went ahead and just shut it off. So you're only going to get the first part. Unfortunately, you don't get the rest, but it's worth it. You don't want to miss it, and we'll schedule another interview somewhere in the future if you leave us enough comments and ask for it. Hey, Tom, thank you so much for joining me today. I'm super excited to talk to you. I've actually been wanting to talk to you for a really long time, so welcome to the show.
Oh, thank you, Mark. I really appreciate the invite and the enthusiasm. Let's do it.
Yeah. So, one thing that I've really enjoyed following you on lately is obviously you've been a market analyst for a long time, and you really get the inner workings of what's going on. But really, you've done a really good job kind of looking at the geopolitical picture, like the macro of the macro, if you will. And it's been really insightful. You've been nailing it. You've been nailing it, I guess. Okay. So yeah. I want to talk about all this stuff. I want to talk about, obviously we can't ignore that the markets are just completely melting down around us at the time of this recording, which is June 14th. Yesterday, the S&P was all red. So we'll look at the macro picture of that, but then I want to go to the macro of the macro, which is this geopolitical picture, which you've done a great job talking about: Russia, Ukraine, China, all of that. Let's just start with the micro of the macro at this point, which is these global markets. So I mean, sea of red, like I said, S&P was all red yesterday. Everybody's hanging on the words of the Fed. Are they going to raise rates tomorrow? At the time of this recording, it's tomorrow. We don't need to speculate on that necessarily, but I don't know if it's going to make a difference. What's your take on that? Markets melting down. Is the Fed going to be able to do anything about it? And where are we headed?
Okay, well, the big thing to understand is, and this is I think what everybody is beginning to get wrong, is that the Fed is not raising rates to stem inflation. That's what they're telling everybody. But the Fed's not doing this for this reason, okay? They know that this type of inflation they have no control over. This is a cost-push inflation environment, meaning supply chains are a mess. People have money and they don't have goods, and they need those goods. We need the oil, we need the diesel fuel, we need the food and the Band-Aids and all the rest of it. And so because of that, that's what's pushing prices higher. People willing to pay whatever it takes to get the basic necessities of life. It's not demand pull, which is where Keynesian economics tends to work best. Keynesian style economics, which is what we all practice. So the bigger picture, and I'm going to like transition quickly to the geopolitical stuff, but just to understand that I think the Fed is looking at the big geopolitical picture and realizing that they are under existential threat, that their interests, the commercial banking system. Remember, the Fed ultimately reports to the commercial banking sector of the United States. What's best for the commercial banks of the United States is what's best for it's what's going to determine Fed policy up to the point where it can. Now, that being said, why the Fed is raising interest rates, it's causing a massive dollar liquidity problem around the world. It's actually been doing this since last year, okay? And between excess reserves and the reverse repo facility that they have, the Fed has sequestered almost $6 trillion. This is $6 trillion of base money that should be flowing around the world that isn't, okay? And because of that, that's what's got the markets into a tizzy. The problem is that everybody has mispriced this environment. They've all been used to, and they've been imprinted with the Fed's got our back. And when Bernanke was the Fed chair and when Yellen was the Fed chair, the Fed did have our backs, right? So the financial markets broke, the global financial system broke in 2008. And since then, it's been limping along on life support with two globalist, Davos-bound, sympathetic Fed chairmen who had no interest whatsoever in protecting U.S. domestic interests. Only the global financial sector. So for the last 14 years or so, the Fed has been the world's central bank. That has ended under Jerome Powell. He announced this directly to Christine Lagarde last May. Okay? When she came out and said, we need to coordinate global central bank policy in order to fight climate change. And Jerome Powell stood up and said, no. And she got angry with him. She yelled at him, and he's like, no, I have a dual mandate of stable prices and full employment here in the United States, and that's my job. I don't work for you. I don't work for the European Central Bank, and I don't work for the Bank of International Settlements. I work for the American people. This is the first time a Fed chairman has said this since Paul Volcker. And so the markets have, I'm getting to the point now, the markets have mispriced this idea that the Fed has got our backs, and therefore they're finally coming to the realization they've mispriced everything, and that equities are too high, bonds are too high, everything is too high, and everybody is getting to cash now. There's not enough dollars. They're getting to cash, and they're trying to figure out what to do. And they're anticipating the Fed raising 75 basis points tomorrow. Now, when they had previously anticipated a 50 basis point rise.
Yeah. And what I mean, everyone's thinking. I've been seeing all these analysts talking about this Volcker moment, but they just don't have the room to go into that Volcker moment. But I want to go back to what you're talking about, no demand pull. And so you're saying it's all cost push. And so for everyone listening, basically as costs go up, so commodities go up, manufacturing goes up, shipping goes up, that all pushes the cost of goods up. But then there's the demand pull. When they print too much money, there's too much demand, and it pulls the prices up. But I've been listening, and I would imagine you would agree that every word that the Fed says is very measured. Like they probably think about every word. They probably have a few people look at every word to make sure what they're saying is very measured. And Jerome Powell said there's not much more the Fed can do about inflation without crashing the markets. So to me, that sounds like, well, there's two ways to solve high prices. One, you could increase supply, but they can't print more oil or food, or you can destroy demand. And so what does that mean? There's not much we can do about high inflation without crashing the economy. So if they crash the economy, that does destroy demand. Do you think there's something there? Or is that looking too deep?
Yeah. No, I think demand destruction is the word, the phrase on the lips of almost all the major central bankers at this point. It's certainly on Christine Lagarde's lips over at the ECB. She's signaled this for 2 years, that she's more than happy to destroy demand in order to get inflation under control. Again, I don't think the Fed is doing it for these reasons. I think the Fed is doing this, is saying some things in order to be able to do something else. You got to remember that, look, these people often don't say anything where their lips are moving. Then they're lying. When they're not talking is when they're not lying. I mean, you have to always bracket that they never tell you the whole truth. They tell you the truth that they can get away with telling you. Okay, so the Fed can't come out and say, oh, by the way, our goal is to destroy the euro offshore dollar markets and destroy the ECB and politically break the European Union. The Fed can't come out and say that. But the Fed can come out and say, yeah, we're trying to get inflation under control. We're trying to get prices stable. We're trying to do what we can. That's what the Fed can say, okay? And I think a lot of analysts are too focused on the domestic numbers. And I've been saying this for a long, long time, Mark, and it's just nothing new. It's like everybody's focused on the numbers. Well, the current account deficit is this, and the trade deficit is that, and the budget deficit is this, and because of that, they only have so much room. I disagree with everybody, and I want to kind of go back to what you said earlier. I think the Fed's got all the policy room in the world to raise rates as far as they need to crash the global markets, because the Fed, unlike the ECB, has the ability to print all of the elastic money it needs to keep the banking system solvent. The Fed has finally come out and said, we are here to save the U.S. banks and bankrupt everybody else if that's what we need to do in order to stay in power, and to put Congress on a spending leash. They've never had a Fed be willing to put Congress on a spending leash since Paul Volcker. I'm the guy who first put into the marketplace, into the zeitgeist, that there's a Volcker moment coming. I said this on June 17th of last year. I put all this together literally within the first 2 days after the Fed's June meeting. I was like, look, this is what they're doing. Because the euro just fell out of bed. Everything is a mess. And everybody's screaming about this. And it was at that moment that the entire financial press turned against the Fed. And the political class on Washington turned against the Fed. And then within 3 months, we had an insider trading scandal where the Fed was under an insider trading scandal. Like, are you kidding me? Like, when you start to put it all together, it's very, very clear that that Europe does not want a tight Fed. They want a loose Fed and a civil war here in the United States in order to freeze capital from leaving the mess that is Europe. Europe is bankrupt. The European banks are insolvent. They've been at negative interest rates for 8 years. There's no hope for the euro. The European Central Bank cannot print elastic money. It's a mess, and it's an easy mess to break. And all the Fed has to do is raise interest rates. And that's what they're doing. And now all a guard can do is stand there like a deer caught in the headlights going, oh, I guess I raise interest rates now. Yeah, I guess you do. And it's not going to help. And then that money that's frozen in Europe from all the projections around the world, what they've been doing for the last 2 years, 3 years, since COVID started, was to project this idea that the U.S. is headed towards a civil war, that it's headed for political breakdown. Okay, and that freezes global capital because people are sitting there, in their multifamily offices going, okay, where do I put my money? The U.S. is a mess. Europe is a mess. China's a mess. Where do I put my money? And it freezes. But the minute the world begins to realize that the U.S. is not a mess, that there is a way out of this, that there is policy changing, that money will begin to flow. And it will flow out of the weakest markets globally. And the weakest market globally right now is Europe. I've been saying this for years. And when that starts to happen, it's going to give the Fed an awful lot of room to raise rates far higher than anybody thinks, because trillions of dollars of capital are going to come in and support our markets.
So I guess I wanted to start micro and macro and work our way up to the macro, but I think we need to go up to the macro to understand what's going on there, so we can then come back down to the macro. So let's jump up to the global stage then, right? So,
Sure.
I guess there's different factions going on around the world. So obviously, I know you talk about a lot about it. There's the Davos Euro ECB group, which it seems like the Obama-Biden administration is part of that group. And then you have, looks like, Putin and Russia is trying to kind of separate against this globalist agenda a little bit. I don't know where China falls in. But if we just focus on the kind of Euro Davos group, ECB group, so is that kind of how, I guess first, before I dig in, is that kind of how you see it, like those different factions like that?
Absolutely. And that's only two of them. There's also the commercial banking system in the United States and American patriots. There's also the Brits and the classic neoconservatives coming out of, and that emanates out of the British intelligence, British Foreign Service, who also control the State Department and the DoD. And then you have the Chinese, who are mostly aligned with the Russians at this point, and the rest of what I would call the global South, that whole Central Asian complex that is beginning to unify.
Okay. So if we look at the Euro Davos ECB group, which is, the World Economic Forum and World Health Organization, pushing all these policies and the George Soros, et cetera, we throw them in that camp. And to your point, right, they went to Glasgow last year and said, hey, we need to spend 150 trillion on climate change, 6 trillion a year for 30 years. But before that, the point I guess you're making was, I guess, June, about a year ago today, when the Fed, Jerome Powell, and the ECB, Lagarde, met, and they said, hey, we need to spend all this money on climate change. And Jerome Powell said, no, we're not doing that. And so I guess what you're saying is that kind of signified this breaking of the faction where Obama-Biden administration is trying to put us into this Paris Accord and put us into this globalist climate change view. But the problem is, the way that I'm seeing it, and tell me if I'm wrong or correct me or add on to this, but I guess the way that I'm seeing it is that if they want to go spend 150 trillion, 6 trillion a year for the next 30 years, That's going to completely destroy the currency, right? Destroy the bond market. And so it looks like this war. So I'm a Bitcoin guy. And so like every person says Bitcoin will never succeed because the bankers will never allow it. They won't let Bitcoin come up and take away their power, which is, of course, a good argument. And I would agree with that. Of course, that's the case. Why would they willingly hand over the power? But if that's the case, then why would the Jamie Dimon Fed want to give up power to the ECB? So maybe that's the fight. Is that? Am I reading that right?
Yes, that is exactly the fight. This is what I identified about a year ago. So to be clear, Powell dressed Lagarde down in early May, at a central banker conference over in Europe. And then on June 16th, the day of the Fed meeting, is when they raised reverse repo rates by 5 basis points above the market, above the Fed funds rate. The same day that Biden met with Putin in Geneva to broker a temporary peace over Ukraine. All of this stuff happened on June 16th of last year. So we're almost a year to the day away from this. So that was the order of events. And you're right, like what you just laid out, which has been my thesis for a while now. And when I started to put this thesis together, I turned to some of my patrons who are very smart people. I've got some, people who are hedge fund managers and, bankers and whatnot, and the people who have been inside Wall Street. I've never been inside Wall Street. I'm some dude who, lives in a house he built in North Florida and just observes the world, right? But you make observations that that attract high quality people, and then they fill you in as to what's actually going on. And when I said to them, look, does anybody really believe that Jamie Dimon is going to turn over JP Morgan to a bunch of feckless European eugenicists? German eugenicists, no less? This guy's Greek. Like, Jamie Dimon is Greek. Like, and the Greeks and the Germans hate each other. Can you see this disagreeable, very powerful Greek CEO of JP Morgan, who's also then a board member, who's also then a shareholder in the New York Fed, the most powerful of the 12 Federal Reserve regional banks? Can you see him turning that over, the commercial banking system in the United States, over to Europe? For what? To turn the world over into an MMT nightmare, to spend $150 trillion on fighting global warming, which is a complete canard that these banks only went along with because there was money to be made. Now it's real. Now they want to destroy the banks as well as destroy the global economy and make it safe for European communism. No. At that moment, like I just say, everybody is like, says, pull back and says, you know what? No. Now, personally, I think that fight actually started, now the more I've dug into it, I think it started much earlier than that. I think Dimon became aware of the problem back in 2016, 2017. I think that's why Powell was given to Trump to nominate to Federal Reserve Board, why John Williams became the head of the Atlanta Fed, why they finally were able to put the secured overnight funding rate in place and break the United States dependency on LIBOR. Like, a whole bunch of things happened well previous to this, right? And then it was Dimon in 2019 who refused to take any European debt as repo collateral, thereby driving the European markets into a tizzy and creating the repo crisis of September 2019, which then led us into freaking COVID. Like, all of this stuff is like clear as day that this split was already well underway years before I finally identified it. But I identified it a year before everybody else did. Like, and that's the crazy part about this. So it's very complicated, but at the same time, it's really quite simple. When someone's ox is being gored, and that ox is, and they're trying to like kill the ox, everybody turns around and says, you know what? No, you're not killing my ox. And then once you got that, then you can see people react in real time to honest to God incentives. Because at the end of the day, everybody acts in their own enlightened self-interest. And cartels and relationships that may have been, impenetrable and seemingly inevitable and permanent, all of a sudden become very temporary, and all of a sudden split. And we all know that cartels are an unstable arrangement. And at some point, the cartel breaks, and we're watching the cartel of central banks break right in front of our eyes.
Yeah, the cartels only go along with it as long as it continues to serve their own self-interest, right? So, like, I talk about it a lot, like, I don't see like this big master plan where all these people got together and made this elaborate plan. It's kind of more like birds flying in formation, and they all just kind of move together. They didn't make a predetermined plan. They're just kind of moving together. And as long as they're all going in the same direction, they fly together. But as soon as they don't, then they'll split up, right? But just to nail this point, just to make sure I'm clear and for everybody listening, if the Fed would continue to provide liquidity to the entire world and will continue to print $150 trillion to fight global climate change, that would destroy the dollar through inflation, right? It would debase it, devalue it so much that nobody would want to use the dollar. It would destroy the currency, which then the Fed would end up losing its power. And so they don't want that to happen.
Absolutely,
so they said, no, we're not going to keep printing money. We're not going to continue to provide liquidity to the world. Is that the right piece right there?
Yeah, it really is. And then, and to put a finer point on it, think of it this way: the system is so broken that we're now at a situation where the Fed has two very distinct and distasteful choices. They can either allow Davos to win, destroy all the the individual central banks, do away with individual national sovereignty, roll all the wealth first up to the ECB, then to the IMF and the BIS and the UN, and create global government. Or they can crash the global economy and revalue all the assets based on temporarily created, credit liquidity that, it's a bubble they blew, but they can always pop it. And if they pop it, and I wrote an article, I think about 3 or 4 months ago, I said, look, it's all about the order of operations. If you're the biggest Ponzi scheme, you can break all the smaller Ponzi schemes and be the only Ponzi scheme left running. The Fed is a Ponzi scheme. I'm not like laying out here that I'm a fan of central banking or anything along those lines. I'm just laying out whose incentives are where at this moment in time. Obviously, that map has to change constantly with new information and with each move that the other person makes. It's a game. It's a game that's move, counter move, point, counterpoint. And right now, this is what the Fed is doing. And it's the one that makes the most sense to me.
Yeah, it makes the most sense. Like I said, just from like I said, I've had to fight off that the Fed, the central banks will never allow Bitcoin to survive because they don't want to lose their power, and of course they're right. And so then of course the central banks don't want to lose power to each other. So it's like, of course, it makes the most sense.
Oh, no, what I was going to say is, and that makes perfect sense as to why right now at this moment in time, with everybody, with the Fed reasserting its power, with the ECB desperate to try and retain whatever it has, that everybody's attacking crypto right now. Like when I look at this, and I said this right after Terra started to blow up, and then they went after Tether like a couple of days later. I'm like, oh, this is just a coordinated attack on all crypto liquidity, and they're going to keep hitting each one of these until we get to the point where they can drive the price of and try and break the crypto market. That's what they're doing right now. Makes perfect sense to me. So it's okay. Like, and I warned all my people. I said, look, if you see a weekly close on Bitcoin below 28.9 or whatever the floor was, there's a floor between 28 and the whole cluster of lows from last summer. If you see a weekly close below that, we're going to 20 grand. I don't care how it happens, but we're going there. And it happens to be now staked Ethereum versus Ethereum, and the doom loop that is the current problem within Ethereum, withdrawing all the liquidity from that market. And at the same time, all the leverage that was built up with Bitcoin futures and everything else, just pulling the liquidity off the market. It's not hard. People need their dollars. I can't get gold to rally, for Christ's sake, into this environment. Not going to get Bitcoin to rally either, especially when the governments hate it. And Christine Lagarde has said quite explicitly on multiple occasions, we have to do something about cryptocurrencies because it can act as an escape hatch. And if there is an escape hatch, people will use it. That was a threat to the Bitcoin market a year ago.
Yeah, the funny thing is the war on drugs, how successful that's been, right, in the last 50 years. But when the government tells you that you shouldn't do drugs, it doesn't necessarily make you want to do that. But when the government tells you that you don't have the right to store your wealth in a way we can't steal from you, and if you have a safety hatch, we're going to take that away from you, then it sort of makes you want to have that safety hatch. Sort of like when they started talking about cracking down on guns again, then gun sales go through the roof. So they kind of do their own marketing for them. But to that point you made, I hadn't necessarily I've been covering this a lot, obviously, from the Terra Luna crash. But I've been looking, and then now what's happening with Celsius, it's being under attack. But I've been making the case that pegs are meant to be broken. Obviously, George Soros got famously rich for breaking the peg of the Bank of England, and I was looking at more like if the markets are crashing, these big hedge funds they're not making any money. They got to go find alpha somewhere, and for them, these markets are so tiny. It's pocket change. They can throw a couple billion around, break these pegs, and so it's rumored that whoever broke the Luna peg made 800 million. Close to $1 billion on that crash. And so, of course, they're just going to keep going after the next one, the next one, the next one. Potentially, it's even an inside actor that's doing that. I hadn't necessarily thought of it as maybe some of these Fed banks or government-type institutions that are actually doing it. But you think it could be at that level?
Yeah, I think it could be. Honestly, I wouldn't put it past these people to have created Terra Luna in the first place in order to crash it at the opportune moment in time. Like, dude, put on your Emperor Palpatine hat. Okay, one of the things that I do on a daily basis is literally put myself in the minds of these people, right? And I play a lot of board games, and I've played a lot of games in my life, and I've been a very duplicitous and horrible opponent to my best friends and even my wife at the gaming table. I can tell you that I've done things to people at the gaming table that my wife wouldn't speak to me for 3 days afterwards. Okay, and we get that, you get that aggression out at that moment in time. I've watched games of diplomacy where lifelong friends sat there and stabbed each other in the back and then wouldn't speak to each other for 5 years afterwards. Okay, this is. And you don't think that with the fate of, their 150-year global project, i.e. the Brits trying to break Russia, or the 80-year project of the UNESCO Julian Huxley crowd who wants to destroy our access to cheap and available energy because they think we're a virus that will destroy the world. Like, if you don't think these people won't do whatever it takes to destroy your ability to get money and preserve wealth outside the system, you're terminally naive. Like, the plots and the psyops and everything else are far deeper than any of us could ever imagine. And we're never going to see them all. We don't have perfect information about any of this stuff. We can't prove any of it, but it's all staring us right in the face. Like, timing in geopolitics and markets and anything like this, there are no coincidences. I'm dead serious, Mark. I've seen it happen too many times. We've all seen it happen too many times. There are no coincidences. So I will ask the question: Was Terra a George Soros project, or I don't care. It could have been anybody's project behind the scenes, propping this thing up. Could have been a Chinese government project. Like, it doesn't matter at this point. Like, one of the things Dave Collin and I talked about in the podcast we did a couple of weeks ago. Dave brought up an old talking point of mine that China may have left. Have left like financial tack nukes, just waiting for the right market conditions to blow off, right? Like, by having some guy like Bill Wang directionally, so over levered on a particular bet that all that has to happen is for that bet to move 5% against him, and then he gets wiped out. He pisses off to, the villa created for him by the Chinese government, and Goldman and everybody else is left holding the bag that the Fed has to bail out. Like, this is what happened with Archegos Capital a year and a half ago. Okay, this is what's happening with Kathy Wood and her ARC fund. Like, she's a protege of Bill Wang. Okay, and that guy was a known criminal, and still all of these prime brokers gave him billions of dollars to go directional on GameStop with. Like, what are you kidding me? Like, what am I, 12? And I don't believe that this stuff is not freaking somebody's design? Give me a break. Like, that's stupid. Obviously, they set this stuff up for the moment for certain things to go off and lever up, and not lever up, but accentuate and accelerate a particular thing they want to see happen at that moment in time, or as a defensive measure against somebody else trying to do something to them. These are moves that you set up. These are defenses, mines you lay in place for the day for a lot of them to blow up. Always think strategically. These people are in a war with each other. Like, it's not just Russia and Ukraine mining the harbor. It's literally the entire, the financial markets are a war. They always have been.
All right, hopefully
Want to know how to be a successful investor? The answer is stay with what you know. Don't listen to me. Don't listen to TV people, internet people. Just stay with what you know. If I told you you can only have 20 investments in your life, you would be very careful. You wouldn't be jumping in and out, listening to hot tips every day, every month. You would stay with what you know and you would become a successful investor. Everybody watching this knows a lot about something, whether it's fashion or cars or sports or something. When you see something that you know is going to be successful and exciting, don't just say, oh, that's going to be great. Don't tell all you. Then you go and you do your research and you figure out how to and if you should invest and how to invest, and then you invest. You will know it long before I will, or long before other people in the investment community. You will also know when to sell, because you will know when something's going to change again. Nobody likes to hear it. Everybody wants a hot tip. Everybody wants to be rich this month. In those days, we did nothing but focus and concentrate and dig deep and dig deep and dig deep.
Hi there, Greg.